I'm with Doug Groh now, portfolio manager over at Tocqueville. I love how you said yesterday, Doug, that gold is a measure of financial anxiety. I think that's really well said.
Well, thanks, Danielle. I think it is. You know, if you look at the markets and you look at the response gold has had to the markets, you see gold perform well when everybody's anxious about either the dollar, interest rates, perhaps geopolitical events. And it looks like the overarching theme this year has been geopolitical events. You know, certainly in Europe and with Korea. Investors are looking for that safe haven, and gold provides that.
You were on a panel with me yesterday where we examined the role of the dollar in regards to the price of gold. And you know, we looked at whether that's one of the greatest myths, whether there is an inverse correlation, and you really see it as a safe haven play, right?
I do. You know, you can look at the dollar against gold and you can find periods when they're inversely related, and traders perhaps play on that inverse relationship. But over the long term, and this is what we're trying to do, is really capture the opportunity in gold for the long term. When you look at the credit-based economy we have and the amount of debt that's been generated and will be generated in the next number of years, certainly with the Trump plans, one would recognize that there is insufficient growth from that credit stimulation to cover that debt over time. And as a result, you're going to have to diminish the currency that debt is paid in. And gold would be a good offset to that diminishment of value, i.e. or inflation. So I think investors have to recognize that, and I think they are recognizing that the plans Trump is putting out there just are not realistic. It's not reality.
So Doug, why the softness now in the gold price?
Well, you know, I think there's a couple of things. We've had a good run since the beginning of the year into April. We had the World Gold Council come out with their numbers, and they've indicated that while demand is actually pretty good for the year, it's off on a year-over-year basis. And we've seen the central banks pull back a little bit, but coins and bars are doing very well. I think there's a little bit of a concern about the Indian market with the goods and services tax that's going into effect later in the second half of the year. But I think the future for us is really quite good. You know, we're seeing a good foundation on gold at $1,200 an ounce, and I feel real good about that.
So a bit of a sell in May and go away phenomenon.
Well, I think we're seeing that as well. You know, traders really set the price, and I think they're looking at the markets and saying there's other opportunities.
And Doug, I think we're both in agreement because, you know, when you're covering gold, a lot of people want to typecast it into one thing. It should be doing this because this is doing this, but you know, we were both saying that it's just so multifaceted. And
gold is wonderful in that regard. I mean, every culture has a different view on gold. Some look at it in terms of a store of value. Some look at it as an offset to, say, their currency, perhaps as a hedge to inflation or monetary policy. And I think that's the beauty of gold, is that it offers so much to investors around the world, where, you know, in parts of the world, people don't care about the dollar, but they care about gold. It's a cultural phenomena. I think that's fascinating.
Doug Groh, thank you so much for stopping by.
Thanks, Danielle.
And thanks for watching our coverage here from the Minds of Money Conference in New York.